Hey, everybody. Welcome back to the Real Deal Pod with Allister and Jeff. It is another beautiful Wednesday afternoon out here in our beautiful province of British Columbia. I'm here with my main man, Jeff, as always. Jeff, buddy, how you doing today, man?
I am doing well. I am doing well. Back in the saddle. Wednesday, beautiful day outside, and just getting her done, as they say.
Any anything new? Anything crazy happening around you? What's going on?
Well, I think this is a loaded question, but
It
yes,
always is.
yes,
That's how we get the excitement going for our pod, Jeff. I
the
set you
loaded.
up to hear the crazy stories of Jeff Lee.
Well, no crazy stories outside of the Bank of Canada has had its meeting today,
Don't steal my thunder.
but we'll get in that a little bit later. We'll get to that a little bit later. But outside of weekend stuff, you just ran my face off a little bit, did over 20 kilometers in my midlife crisis of jogging. Then my girlfriend took me to Trevor Linden's gym. Linden, I think it's called, what is that called? Trevor Linden's? Trevor
Club
Linden?
16?
Club
Club 16, is it?
16.
Yeah.
And her and her friend put the work on me in a HIIT class. And
I heard about those, man.
my glutes and my hammies. I You should see me walking up some stairs. It's not
I
a
can imagine,
fight.
buddy.
Um, but yeah, I think I probably owe the swear jar probably about $500 after that.
That's awesome, man. I don't want to do any of what you just did. I've done a hit class, man. Those are brutal. I give it up to anybody that do those because that it is another level of workout to those muscles. Man, you working out muscles a lot of times you didn't even know you had. That's
Yeah,
it until you feel them later on, like screaming at you, like what the
yeah,
hell did you just put me through? Why do you hate me so much?
yeah, yeah,
Right?
yeah, yeah, yeah. Exactly. Yeah, it's like a friend of mine has horses and a very active person, and he started riding horses, and he, just to your point, there's muscles that he never even knew he had that are sore. So
Right?
all respect to horseback riders out there too. Like, wow.
Yeah, man. Yep. That's awesome, buddy. See, and that's what I mean. I love the amazing adventures of Jeff Lee because mine are really, really quiet. I just did showings at my listing. I went out with some clients and then had some nice family time throughout the weekend. My weekend was easy as Sunday morning, baby. It was
Hey,
wonderful. I loved it. I loved it. Yeah, man. It was great. So let's get into it, buddy. Let's get into it because as you said, and I said, don't steal my thunder, Jeff. You did know, and I was going to say, did you know?
I
You
thought you were
should have
loading.
known.
I thought you were loading me up there, and I was like,
No,
okay.
no, 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 no. It was no. The did you know is you should have known because Jeff is our trust lender. BOC, of course, Bank of Canada, right? They did drop our rates, bringing us down a quarter percentage, which brought us down to drum roll 3%. Now,
Well,
on
hold
the
on.
surface, what's that?
You got to
Yeah, go ahead.
clarify. You got to
Clarify
clarify
the
what this
3%.
means. The
Clarify it
three,
for me, Jeff, first.
the 3% is your overnight lending rate,
Lending rate. Yes.
right? That is not your prime
Your
rate.
borrowing, yes, it's not your prime rate.
Right, which is based on your borrowing rate. So
Right.
I'm already getting phone calls. Our the rate is 3%. What does this mean to me? That is the overnight lending rate. Your
Right.
prime rate has dropped down, or is going to be dropping down from 5.45% down to 5.2%. So this is the
Right.
rate. Prime rate is the rate that your loans and your lines of credit are
Are
based
borrowed
on.
upon. Yeah,
Yes.
based upon. Yes. So, thank you, Jeff, for clarifying that piece. So, now, as we all know, lower rates should help us with affordability, right? But there's actually now, and they discussed it in the announcement, there is a storm cloud hanging over this economic outlook, and that is, people, those beautiful U.S. tariffs that are lovely carrot bottom down under, down below us, is wanting to threaten us with. And and I just want, the reason why I wanted to discuss this today is because I don't think we're putting enough stock into it and really understanding what this could do for us. So I don't think the media is going to do a great job of explaining this to people. So I wanted to take a little bit of time, Jeff, for us to give our insights on what these 25% tariffs could do if he makes good on these threats. And it really could, flip the picture upside down because let's start here. If these tariffs hit Canada's GDP, and that's the gross domestic product, right, could drop by 2.4% in the first year alone. And that is enough to shock us into a recession, right? And the good thing is, and this is what we talk about, Jeff, where we say our bank is one of the strongest banks in the world. Our bank is actually already starting to brace for that, right? And they've acknowledged that by saying we may pause on future rate cuts. So, Jeff, I wanted to get your opinion really about what these tariffs could do and what you think these tariffs how they may impact, things going forward. Because the February 1st is apparently his go date, right? So if this, I'm going to pardon my language here, if this jackass, right, who literally, I want people to understand, it's not a joke just how ignorant he is in governance, right? It's not a joke, right? People in the United States thought it'd be funny to elect a crazy person into office. Okay? He's a legitimate crazy person. He has no understanding of how governance works. I'll get into later on just how much these dumbass tariffs actually hurt the United States more than help them, right? But Jeff, before I go into my rant there, I want you to I want your take on how things might be affected.
Well, I'm going to touch on a couple things before I jump into that. But, us as Canadians should never throw rocks at glass houses when we live in one.
Sure.
We take a look at our prime minister and what he's done to our country in the last 8 years. I think it's very careful that when we have an opinion on another country and what they're doing, and I'm not saying you, Allister.
In all fairness, I will say I have a problem with the leaders over, I'm going to say, the past 20 years of my life. And that's including, again, I've always stated I am a conservative. So when I say carrot bottom and Trump-servative and all that sort of stuff, I am a conservative. And the reason I say that is because our future, our conservative business, our conservative politics here, Jeff, is a bunch of Trump conservatives. Okay, it's a bunch of people spewing this Trump garbage. So don't get me started on there. I am not defending any type of liberal policies. I will never defend liberalism, right? But what I'm saying is I'm not going to put it as a whole on the liberals. I'm going to say we've had, even Harper didn't do a great job in it, right? I will always say that our last great leader was Brian Mulroney. That's how old I am, right? So I'm going to take it that far back that's when this country was bankrupted. So go on.
Well, and again, like I say, it's so easy to criticize someone, but when we look at our own situation and what we've done as a country and who we've elected as a country, and then all of a sudden we're coming down on the states and having our opinions on that. I always, like I said, let's look in the mirror and see what we've done and how we've come along in the last 8 years. Now, again, Donald Trump, the one thing that I can respect Donald Trump on is that he is looking out for his country. Like his country is the number one priority to him.
100%. I'm a 1 trillion% going to tag on with you on that. And I think I've been very vocal. I am 1 trillion% nationalist, right? And so just for the listeners out there, right, I want to be cautious with this term, okay? Because there's a very, very distinct difference between nationalism and racism. Okay. And that is where the argument will go. And this is just a political theory thing. And this is where I don't want to take it off the rails. But that where a lot of people take nationalism is they take it over into racism because it's a slippery slope. It's an easy slide, right? So I want people to be very, very careful when they are listening to that rhetoric and understanding, right? When we talk about Canadian nationalism, we are not talking about racism. We are talking about everything that I've ever said. And that is every single culture. We are a multicultural quilt, right? And that is all of our cultures threaded together with one simple thread, and that's Canadian. That's nationalism. That is celebrating every single culture in our country. What is going on down south is far from nationalism, Jeff. Far from nationalism. So I'm just going to pause it there. That's where that slippery slope comes in.
Right. So with Mr. Trump, and again, I'm not saying that I am a Trump supporter, but I do respect that he is making his country, in his opinion, his number one priority and objective. And you also have to kind of respect him that he does what he says. He's not like what he's doing and what
Let's say he tries to do, because everything he's trying to do is getting blocked by the courts as absurdly illegal. So everything he's tried to do is get shut down. So there's a difference between trying and doing.
But he is trying and doing what he has said. So he is hitting obviously roadblocks and speed bumps, which again he should. But he also reminds me of a schoolyard bully, right? So a schoolyard bully will go into the schoolyard, say, "Hey, I want your lunch, and if you don't give me your lunch and what I want, this is what I'm going to do to you," right? And with these tariffs, it's the same thing. The reason why these tariffs, in my opinion, are being imposed is to say, hey, this is what I want you, Canada, to do. I want you to tighten up the borders. I want you to control the immigration. I want you to control, and I'm throwing Mexico in here as well. I want to
control immigration. I just want to pause that for a second. He wants us to control our immigration. See, and that's where I have an issue. We don't have the immigration problem on our side. Actually, our issue is them coming here. So if there is an immigration problem to protect, it's his dumbass people trying to come here. How is that? So that's what I'm saying. And that's what I'm saying. When we give credence, and that's my problem with us as Canadians, listening and giving credence to what the United States is doing without actually acknowledging what it is and why we are different and better in our thought. Because everything that is happening is actually an uneducated thought.
Right. But it's still happening.
Which it shouldn't be. That's like saying genocide is happening and that's okay. Come on, man. That's crazy.
Which is still happening. So at the end of the day, February 1st, there is a tariff that is going to be rolling in. What that looks like is a little bit gray, and what it is supposed to be is to be 25%. And let's be clear, what is a tariff? A tariff is a tax that's being put on goods that are coming into the country, right?
Yeah.
So
U.S. goods.
Back to your original question, well, what does that do? Well, if I'm going to get taxed as a country of goods going somewhere, what am I going to do to the prices of those goods if I'm getting taxed on them? I'm going to raise them, right? So all of a sudden, our cost of goods are gonna rise, and we just kind of went through this in the last 12 to 16 months as far as the cost of goods and inflation. And as soon as the cost of goods continue to rise, what happens to our inflation?
It rises, and we have stagnation then into the market.
Right. So what happens as these tariffs the possible tariffs being imposed, the cost of goods are going to rise. Basically, which then comes the cost of living, which is going to affect inflation rate on both sides. Now, do keep in mind on Canada's side, our inflation rate is about 1.8%. We are now in that 2% mark where we need it to be controlled, and it's been consistently controlled, right? But we're also taking a look at the U.S. inflation rate, which I believe is north of 3%, which they are not controlling their inflation rate. So what is also going to happen on their side is that their cost of goods are going to increase. Their cost of living is going to increase, and it's going to hurt the U.S. as much as it is going to Canada. So is this a win-win? In my opinion, no, it's not. It's a lose-lose. So why are we doing it? And again, it's because Trump has some ideologies that he wants to impose. He is flexing the muscle to say, hey, if I don't get my way, or if you don't do what I'm asking you to do, this is what I'm going to do. And again, this is back to your point. It just shocks me that you also have, it's not just Donald Trump, there's an administration around Donald Trump that advises.
There is no administration around Donald Trump. So the reason being is that he did have an administration in his first government, and they are the ones that put the reins on him. And he came out and stated that if he got put in office again, there would be nobody around him to tell him to say no. So no, Jeff, there is no administration. There are people in positions. There's a big difference between administration and people in positions.
Yeah. The reality of is there is an administration.
There's people in positions.
Called an administration. And maybe it's a little biased to his ideologies, but there still is an administration. So to answer your question, are these tariffs going to hurt Canada? Yes, indeed. Are they going to hurt the US? Yes, indeed. Will that have an impact on rates? Of course it will, right? What does that impact look like? Again, it depends on the economist you talk to. I'm reading something here that this one economist believes that actually rates are going to go down if the tariffs are imposed. But to me, I need to read into this article a little bit because I'm just kind of skimming through it. How does that make sense if your cost of goods are going up?
That's exactly it.
If your inflation rate now is on the rise. And again, if you need to control your inflation rate to that 2% level and you're going higher than that, what do you do to rates? Well, what have we done in the past? We raise them or we keep them where they're at, right?
Yeah. And so here's another little thing that's not getting a lot of attention. And I think because it's getting buried behind, right, the talk of the rates and the tariff threats and all that sort of stuff. But there's also the piece on immigration, right? So this has been an issue for how long now, right? Our immigration in Canada, beg your pardon. So the Bank of Canada revised the GDP forecast lower, and it's partly due to slower population growth and even a possible decline in 2026, right? So if we're now putting a pause on immigration and we're going to see now the decline in population growth, now what does that do?
Well, it might address your housing crisis.
Right. That's what I'm saying. Right. This might be not artificial, but like a literal, like a natural shift to addressing, or a natural fix, not shift, but a natural fix to the housing market. Because if we slow with the slowing of growth, right, and the slowing of people immigrating into Canada, then now we have more open homes, right, for people to own by themselves.
Well, and again, this is, we're going to talk about all these new mortgage rules that have been changing, and this, I don't know. I always go back to our conversations. I think this is our 42nd pod or 43rd pod.
Yeah.
And when I go back to the early ones, to our discussions, to where they're at now, it just seems that everything is always changing and nothing seems to be consistent, right? So even with this tariff policy, as far as what that's going to look like February 1st, is it going to be 25%? Is it going to be a slow, a 5, 10? Then is our new prime minister going to come on and save the day and all of a sudden the tariffs disappear? Like, there are so many kind of theories that are out there, and not theories, but there's so many discussions that are out there.
Yeah.
It just goes back to, let's just talk, in which we are. What is going on as of January 29th, 2025? Because, the reality of it is February 28th of 2025 is going to be a totally different discussion as what we're having today.
Well, and that's what I was going to say, because really that is the truth, right? Because at the end of the day, we can't predict what's going to happen with absolute certainty. The only thing we can do is take the information that we've got now to really stay active and continue to plan ahead. But that's why I really like to take this time to focus on these things and not just get lost in the numbers, but also say, hey, there are some potential factors that we may not be looking at that may affect us in the future, right? But like you said, let's look at the right now because we can't predict that future with absolute certainty.
Yeah.
Right?
Exactly.
Yeah, man. That's awesome. What you got for us? That was all I had, man. I just really wanted to I knew we were going to talk about rates, but just wanted to get, the tariff thing. It's really something that bugs me.
Well, yeah, and it's something that needs to be addressed.
Yeah.
And
What I will say is Canada, hey, listen, if Canada levies that $200 billion tariff back, or $233 billion, sorry, tariff back on the US, they are in smoke and trouble. And that's where I appreciate Canada. That is where I appreciate Canada stepping up and saying, hey, we are not going to be bullied. Because yes, Jeff, he is a schoolyard bully, but he is the worst type of schoolyard bully because he's the fat dude that hides behind everybody, poking and not letting anybody get to him, that's poking and running away. That's exactly what he is. Like, in all honesty, he's the kid that all you have to do is punch him in the mouth once and he will stop talking forever. And that's what everybody has been afraid to do, right? And if somebody would just, at one point, just look at him and tell him he's an idiot and everything he wants to do is impossible. And here's what we are going to do to you if you try to do it. And you are, I won't say the word, right? Then that's how you put those type of people in line. And so I think that we are going to start addressing him the way he needs to be treated, like an impotent child.
Yeah, well, we'll see.
That's it. That's my soapbox. That's what I stand on. And yes, people, I am a conservative when I say it.
Well,
so I want you to understand there are good conservatives out there. Not all of us relay that Trump garbage and nonsense. And any of the conservatives that do, you and I are going to have a discussion because I do not want you polluting my conservative people's party, my conservative party, with that ignorant garbage. Sorry, we're done.
Well, and here's the thing. Everybody has an opinion. Everybody has the right to their opinion.
They don't. Hey, listen. Everybody has the right to their opinion. They don't have the right to be wrong, and they don't have the right to expunge wrong crap. That's not a right. And that's another thing, Jeff. In our world, people got to start actually looking up the difference between rights and privileges. Okay? There's a vast difference between rights and privileges. We do not have the right to be ignorant.
Yeah.
We don't have the right to be a jackass. That is not a right in life. There's a difference between rights and privileges.
Yeah, but again, that's an opinion, right?
No, that's fact, man. Look at the Charter of Human Rights and Freedoms. It does not say you have the right to be ignorant. Look at the Constitution. It does not say you have the right to be ignorant.
How many people do you know have opinions that are not right, but they're an opinion?
But it's not the right. But that's what I'm saying. It still doesn't make it the right. The Charter of Human Rights and Freedoms actually sets up what our rights are. It does nowhere in there state that your right is that you have the right to be ignorant.
Well, again, let's not overthink this. Everybody has a right to their opinion.
Everybody has the privilege to their opinion, and it was fought for. That's the difference. Everybody has the privilege to their opinions, and it was fought for.
Okay, well, let's move forward.
Let's go.
All right, so switching down another road. So what we want to talk about, and again, don't want to go too heavy on this all in one pod, is just some of the new mortgage rules that have changed. And this is a much different conversation that we had, so we're really switching gears.
These are people's rights. This is what you get. This is the right. These are your rights.
So with that being said, some of the new mortgage rules that have been rolling out for 2025, I just want to kind of mention two of these new mortgage rules is understand that by the end of 2026, we're going to see 86% of Canadian mortgages come up for renewal. So that's 8 out of 10 people that that have a mortgage their mortgage is going to be coming up for renewal here by the
Now
end.
that was obviously because of the pandemic, right? Everybody taking advantage of lower rates and all
Yep.
that sort of stuff during the pandemic. Yeah.
Yep.
Yeah.
So what this new regulation or this new rule means is that anybody that's coming up for a renewal, you no longer have to stress test and stress test to qualify with a new lender. You still need to qualify if you are going to switch banks. That's a very, very important thing to note and to remember and to understand. There's many of us that think, hey, if I'm with the Bank of Nova Scotia, now I'm going to go over to Toronto Dominion and everything is just going to slide over. I don't need to qualify. That's 100% incorrect. The only time that you don't need to qualify is if you're going to stay with the same lender.
That, as I think we touched on just a couple pods, and I'm glad that we're taking some time now to actually get into it, because I do remember one pod we touched on that fact. So I'm glad we're taking the time. Sorry to expand on that, because that's a big change.
Yeah, it gives options for people. So right now, say for example, Allister, if you have your mortgage with Scotiabank, your mortgage is coming up for renewal February 27th. In the old days, prior to December of 2024, in the old days, which is not so old, you would have to requalify under the stress test, which basically affects your purchase power or your refinance power or your borrowing ability by about 25%, right? So sometimes you may not have had the option of going to another lender because you no longer qualified because of the stress test. So this new rule that is out is that if your mortgage is coming up for renewal, you need to go to another bank, or you want to see if another lender is going to provide you a sharper rate. You still need to qualify, but you don't need to qualify under that stress test, which basically opens up the doors for you to, possibly qualify with other lenders outside of the lender that you're with. So that's a big thing. It's about choice, and it gives people the opportunity to say, hey, if my lender is going to only give me this on my renewal rate, now I may have the opportunity to take it to other lenders and basically switch my mortgage or transfer my mortgage to a new lender. So again, it's allowing borrowers options. But here's the reality of it, and statistically speaking, is that 7 out of 10 people whose mortgages are coming up for renewal, right?
Yeah.
All of them seem to want to stay with their existing lender. Right?
That was going to be my next question. I was going to ask you is how many people do you foresee potentially switching, right?
Here's the thing is, and this is what I've always wanted to make people understand. People will stay with their lender for, in my opinion, for various reasons. Sometimes they don't know that they can actually switch and go to another lender. Sometimes they're going through a life event that prevents them from going to another lender. Sometimes they say, my lender loves me. I've been there for 5 years, 10 years, 15 years. They just think I'm the best. And I always jokingly say, well, stop making your payments for 3 months and see how much they love you. And then the other part is the uneducation. So when you ask me the question, statistically speaking, 70% of people will stay with their lender because one of those 4 reasons, right?
Yeah. Yeah.
But I find that a lot more people are becoming educated as far as what they're able to do now based on renewals, just by education and social media and pods like this one, to say, hey, now you actually have an option. You have an opportunity. You don't need to stay with your existing lender. You can move to another lender that's going to offer you a better rate, providing that you qualify. And again, with this new rule, a lot more people are going to be able to qualify with new lenders because they don't have to qualify with the stress test.
Right.
Now, the other part that is really, really important to drive in is that understand, folks, your lender that you're with make their money on your renewals. They do not make their money on what we call the origination, coming to them with your mortgage. They make their money on the renewals. And I'm going to say 9 out of 10 times, 10 out of 10 times, if you show us the renewal letter as far as the rates that they're offering you, because statistically they know that a large percentage is going to stay, to
Right.
what is out there, I'm going to say 95 plus percent, there is always a sharper rate.
Yeah, and that's why they renew you at the higher rate on your renewal, and that's why they make the money, right?
That's where they make the money. They do not
Yeah.
make the money when you come to them when you're purchasing a house and getting the mortgage, what we call on the origination, right?
Right. And I sorry, I was just gonna say, I think there's a good example to sort of use with that is, when you sign up for Shaw, right? Or Telus, in the first 2 years, they give you that spanking TV package where you get all of these great bells and whistles. And then on the next package, you don't get that anymore. You get a whole bunch of base stuff and you got to start paying for a bigger subscription if you want to keep going. And most people don't change. They just keep the package that's at a higher price.
Yeah.
Right. So to your point, is that's sort of the same process.
Yeah, exactly.
Yeah.
Because humans are just path of least resistance,
Right.
right? Once
Yeah.
we kind of start doing our thing, we just want to keep on doing our thing. We don't want to change because
Yeah.
change makes us feel uneasy,
Uncomfortable.
uncomfortable.
Yeah.
The reality of it is, folks, is that if you are with a lender and your mortgage is coming up for renewal and you don't want to even have the opportunity to see if something is better for you out there, I guess it's going to cost you thousands of dollars because you don't want to ask the questions, right?
That's crazy.
Or other times you don't know the question.
Yeah.
You don't know that you have that opportunity. So this whole new rule that's coming in for what they call transfers or switches, which is just another fancy name. Your mortgage is coming up for renewal. Can you switch it to another lender? Yes. Do you need to qualify? Yes. But do you need to qualify under the stress test? No. And what that simply means is that you have options that you
That's
didn't
awesome.
have before.
That's awesome. And that's, like I said, that's a huge thing. I'm glad we touched on that. That's huge.
All right. So that's number one.
One.
Second thing, well, one of many rule changes that we've been talking about them.
Yeah, we get to string this out through a couple of pods, so this is good.
We're going to string it out. Exactly. So the second rule is basically refinances. So this is all to deal with the housing crisis that Canada has right now and creating housing, right? So this is, again, one of the first times that we are able to refinance our primary residences back to 90%, providing that you're going to add a secondary suite, such as a basement, such as a lane home, some kind of occupancy where it's self-contained, and self-contained again in normal language has its own door, has its own bedroom, has its own bathroom, has its own kitchen. It's a self-contained livable unit that we can now refinance our primary homes back to 90%, providing that we are creating housing in that primary space. So be it a basement suite or be it a unit of some sort or a lane home of some sort, up to a maximum of 4 units.
That's really, really cool. Now, here's a question for you. So last year they had the rebate that they allowed for basement suite renovations.
Yeah.
I believe it was 45,000.
Yeah.
Was that what it was?
40,000.
Yeah, something in around there. Now, is that still available? One. I don't remember.
I haven't heard that it's not.
Yeah, neither have I. So could you use that in conjunction with that new policy? So if you, let's say you're buying into a suite without a basement suite.
Yeah.
You're buying into property without a basement suite. But now you're going to take that $45,000 rebate, turn it into a basement suite. Can you now?
Yeah, I would say the answer to that is yes, because it's a loan, right?
That's amazing.
And it's not a secure loan, whereas a refinancing and you're pulling the equity out as secured.
Yeah.
That rebate wasn't secured to your property. It was a loan of 40,000 plus. And I believe that it wasn't necessarily forgiven of the 40. I believe you had to pay a portion of it back.
Yeah, I think so. I can't remember the details, but yeah.
I feel that you had to pay half of it back and then half of it was going to be forgiven. So I would say My common sense to that says yes, because
Yeah.
that loan is not secured to the home. Whereas what we're talking about with these refinances
Right.
are secured to the home. So
Right.
again, to keep this real simple and to bring it back is
Mhm.
that if you own a home, if you plan on putting a basement suite in it or some type of self-contained unit in it, up to a maximum of 4 units, you
Yep.
are allowed to refinance up to 90% in order for you to do that. Now, there are some rules behind that. The property value cannot be more than $2 million. And again, the maximum amortization you're allowed to do is 30 years. So
Right.
again, this is one of these new rules that are coming out to try to handle the housing crisis here and create housing. But again, this is all to do on your primary residence.
That's awesome. That's
Yeah,
awesome.
and those are the two that I wanted to talk to you about today, and we're going to talk two next week. So again, just to kind of recap it, because there's a lot of information.
Yeah, recap this one because, like I was going to say, we've got a few. There's so many changes that we have the benefit to string these out over pods. So each pod, I want you to recap this hard because I want everybody to because there's a lot of stuff coming out this year. So I want
And
everybody
people
to
are
be able to
still
take
probably
notes.
talking about our tariff conversation and opinion.
That's what I'm saying. That's what I'm saying. So I want people to be able to take notes, right, on this stuff because it's huge.
So to bring this in line, folks, here we go. 8 out of 10 people that you know that hold a mortgage, their mortgage is going to be coming up for renewal by the end of 2026. One of the new rules is that if you are doing what they call a transfer or a switch, which is just a fancy name for a renewal, and your mortgage is coming up and you want to bring it to another lender or shop that renewal rate around, you no longer have to be qualified under the stress test, which impacted your borrowing power by 25%. You still need to qualify if you're going to switch lenders, right? Very, very important, but you do not need to qualify under the stress test. And what that means, it just allows and opens the doors for options, right? Statistically speaking, 7 out of 10 people, or I'm going to say 70% of those people that mortgages are coming up for renewal are going to stay with their existing lender. But again, keep in mind that those renewal rates that you're getting are not the sharpest renewal rates that are out there. I can bet my left pinky on that and my right thumb. So again, understand that your renewal rates that you're going to get that are initially offered by your lender, 10 out of 10 times, they're not the sharpest rate that's out there. But these lenders that you love so much, that love you so much, are doing this because this is where financial institutions, and I'm not just talking about the big 6 banks, this is every financial institution. This is
Yep.
where they make their money on the renewal. And
Yep.
statistically, they know this. So this is why they're not offering you the sharpest rate that's out there. So again, this policy of when your mortgage comes up for renewal that you don't need to qualify under the stress test just allows more options for you. And again, I find that statistic of 7 out of 10 of you or 70% of us that are renewing stay with existing lender, I feel that that's actually going to come back lower and lower and lower because again, people are just getting smarter. People are becoming more aware, right?
And I
And
think it's awesome. It just allows it forces the industry, every industry, to be at their best all the time. And I think that's what's most important for the people, right? It forces us to be at our best.
yeah, exactly.
Yeah.
And
Yeah.
then the second rule is the refinancing on your primary residence. When you're putting in secondary suites, you now are allowed to refinance up to 90%. So remember, if you're refinancing in the past, even if you were putting in secondary suites, you can only refinance to 80%, right? So let's talk about $1 million home. If you wanted in the past to put in secondary suites, you can only pull out $800,000 less whatever that mortgage is owing on it or lines of credit are owing on it, gives you the money left over. Today, you can pull out $900,000. So that's another $100,000 of equity that you're able to pull out of your home in order to basically put in some type of secondary dwelling within that primary residence or on that primary residence, because this is one of those new regulations that are coming out to address the housing crisis here in Canada. Keep in mind, this is not for people that are going to basically be refinancing and consolidating debt and not putting secondary suites or taking that equity out for whatever reason that may be, the only time that you can take out 90% of your equity is when you are basically putting in secondary suites. If you are not, this unfortunately doesn't apply to you.
Amazing, man.
And that's it. We started off on fire, and we were mellowing it out with some
man
conversation.
This pod was hot, buddy. This pod was hot, buddy. It was fun.
It was fun. It
was on fire, baby. Well, guys, that's it, man. Man, Jeff, I can't even speak. This pod was so hot. Yeah. Gang, I got to gather my thoughts, Jeff. Woosah.
Have a cigarette. Woosah. Have a cigarette.
No, cigarettes are bad for your health, man. That's terrible. Don't do that, folks. All right, folks. No, seriously, thank you all for taking the time to listen to us today. Jeff and I are seriously so thankful for you guys taking time out of your days to listen to us. Thank you so much. Continue to leave us your comments, like us, and share us. Your feedback on all of this stuff is always amazing. I got some feedback on my rant last time, and just so everybody knows, I was in the right. No, it was on the other stuff last pod. So I just want everybody continue to give us our feedbacks. We do love to listen to it. We do love to joke, and it's not even if your feedback differs from us. We love to hear it. Just let's make sure that it's constructive. Let's make sure it's positive, and let's be everybody.
And these are only our opinions.
That's exactly it.
We're not saying they're wrong.
Right? We're not. That's exactly it. These are opinions that we have the privilege of being able to give to you, because we did have people that fought wars in order for us, right, to have that privilege to do that for you guys. So that's where I keep saying there's a difference between rights and privilege. So always just remember that we had people fight for the privilege, for us to have the privilege of what we do today and what we do and just our lives, right? The happiness that we get to go outside and walk and live a peaceful life. So anyways, thank you all for listening to us today. Love, like us, share us, but most importantly, stay empowered, stay informed, and most importantly, Jeff,
stay tuned.
Stay tuned. That's right, baby. We'll talk to you all next week. Peace out. Bye now.
Y'all have a nice day.